All right, welcome back, everybody. We're now on to page 3, and this is where, if page 2 didn't slow you down, this is where I start to see a lot of information being missed or skipped or input incorrectly. This is really where the wheels start to fall off. So, on the page 3, you have assets and liabilities. That is all this page is for. So, the first part is going to be your checking and savings accounts. The rule is any checking or saving account that we're going to need for cash to close, appraisal, EMD. Any of these things that are going to be paid for need to be as much as they possibly can in one account. If you can't, because you got a very difficult borrower, just know you're going to need 60 days worth of bank statements for each account that is provided to cover whatever item it is providing, up to and including payroll. Okay. So if hopefully all this is under one account. And if it's not, then just go ahead and start listing each account that they're going to be paying this stuff out of. So that way we make sure we mark it correctly, and we're looking for all of the accounts that we can or we're going to have to source. You don't want to overinflate the assets, and you don't want to set them up as incorrectly false. Because what's going to happen is you're going to run your findings, and it's going to give you an approval based upon the information that you put here, right? And um, if you set it up incorrectly, then you're going to get false findings. Okay. So a couple things I want to note here. If you have an account here with $100, unless you need it for payroll, remove it. That is 60 days worth of bank statements and something else that your underwriter can scrutinize that could cause you problems with your file. So any account that we don't need, let's delete. Let's not start transferring money and moving money. Don't do that, because then you got to paperwork all the transfers. We want to figure out the path of least resistance. Do we need all 3 accounts to close? If we do, okay, let's just prepare for that. Don't move any money. Don't do anything silly. Just provide all 3 accounts. And then when you come to closing, provide money from all 3 accounts. That's the easiest way. You start transferring money in between accounts, and now I got to paper trail the transfers, right? To and from. Okay? And that just causes more headache for your borrower. They're going to hate it. They're not going to want to chase it, and they're not going to understand why. So let's go ahead and limit all that to just, okay, those are the accounts. Those are the accounts. Give me 60 days worth of bank statements for all the accounts, and we'll take a look at it. But anytime you can limit it to just one account, that is going to be your path of least resistance, and I encourage you to do so. Down here, it's going to say other assets. Don't put any of this unless you're going to have proceeds from a sale of real estate. Okay, this other stuff causes extreme problems, right? Especially um, the boats and the homes and the autos and that stuff. You got to show ownership in that stuff. So if you can't prove ownership, don't even list it, because you're not going to be able to use it. And paper trail is everything in this industry. So if I do have a borrower coming back, proceeds from a sale of real estate asset, and then I put in whatever I think they're going to net off their current sale, right? Only if they have a current sale, right? No gift funds are going here. No earnest money is going here. That's not what we're doing. Now, credit is going to self-satisfy. You click order credit. You're going to have a borrower's authorization. Let's go back to page 1, or loan summary, excuse me. And you're going to have to make sure that you have borrower's authorization to do what you're planning on doing, right? So here's that. And then we put today's date, and then how they gave you authorization. If they did an application through Simple Nexus, that's going to self-satisfy. This is going to be a telephone call or an internet, so you're going to put phone, right? Come back over here to page 3, order credit. You're going to pick CIC and click submit. And I'll do another video on how to order credit for just to keep this one as limited as we can. Then you're gonna come down, once you get the credit pulled in and the liabilities populated, you're gonna then add any that didn't show up on credit. If they owe child support, separation maintenance, alimony, IRS tax debt, state tax debt, student loan debt, anything that doesn't show up on the credit report that they pay monthly, Affirm through Walmart.com for buying Christmas and putting it on on a payment plan. Any of those things need to be added here so the liabilities are correct, including payroll deduction liabilities. Maybe they, wrecked a company truck and they're paying their boss back $500 a month until they pay it back. That stuff needs to be input here. So that way the debt to income is correct. Then the last piece that messes literally every single applicant and every single person up: real estate owned. Just because you don't have a mortgage on it doesn't mean you don't list it. Every piece of property that you own that is real property must be listed here. And the reason is they all have debt. I don't care if it's land or an improved property, they all have debt. And that debt comes with what? Property taxes. So at minimum, we got to put property taxes here, if nothing else, right? Maybe a mortgage, maybe some homeowners insurance, maybe an HOA fee. Something's going to be added here because there's going to be some fee associated with that property. Nobody's properties are free and clear, right? Everybody has a payment towards property. So with that said, you need to list every real estate owned here and include the liabilities with those real estates. That's page 3, folks. Again, if the page 2 and page 3 don't hang you up, then you're going to be smooth sailing for the rest of the ride. See you on the next video.